Welcome back. Focus on Facebook. The social media company beat earnings and revenue expectations last night despite the fallout from the privacy scandal. Yesterday, Facebook reported adjusted earnings per share of $1.69 on revenue of $11.97 billion. That was for the first quarter of 2018. Shares of Facebook right now are up 7% in the pre-market. Joining us right now on the telephone is the founding partner of Alpha One Capital Partners, Dan Niles. One of his big positions is Facebook. And Dan, good to have you. Thanks very much for weighing in here. You predicted that the company would beat revenue and earnings expectations. What's your takeaway from the numbers?
I mean, quite honestly, it's even better than what I was expecting. You have to look at the revenues first, and revenues year over year in the June quarter were up 45%. Then in September and December quarters, they accelerated up 47%. And what's interesting is even with all the negative publicity around the supposed data scandal, the revenues accelerated to 50% year over year in Q1. They beat the operating income by about 14%, so their margins were better than expected, and they beat the EPS by over 20% when you back out some of the one-time. So it's really hard to find a whole lot of negatives in the report.
Well, what about expenses going forward and this whole regulatory scrutiny? I mean, are we going to see, new rules and regulations that this company is going to have to adhere to and the entire industry will have to adhere to that will change the reason to own the stock because expenses are higher?
Yeah, I really don't think so. I mean, here's a way to think about it. Even though expenses, they guided to up 50 to 60%. Originally, they guided up 45 to 60. Estimates are actually going up after this print because they beat the operating income margins by so much that even though they're guiding expenses higher, most of the street is actually raising EPS. The second thing is, I'm sure there will be some extra regulations they need to adhere to. Obviously, they talked on the call about the general data protection regulations coming out on May 25th in Europe. But the interesting thing is they said even with those regulations, they don't anticipate those changes really significantly impacting ad revenue. They do think daily active users could be flat to down in the second quarter, but, that's really not affecting the revenues. And quite honestly, the extra regulations for them, it'll help make their site a lot safer, and to some extent it's going to impact their smaller competitors a lot more. They don't have the same resources as Facebook to comply with that.
Hi, Dan. James Freeman at the Wall Street Journal. I'd like to talk about those potential smaller competitors. Normally, those kind of fat profit margins attract competition. Who is it that can challenge Facebook, either among startups or existing tech giants moving into their business?
Well, I mean, you obviously know the list of characters. You've got Twitter, you've got Snapchat, obviously, the two public companies talked about most often. But, I mean, they've been competing since the beginning. And you've obviously seen in this market, it's, not necessarily winner take most, but it's sort of evolving that way as Facebook continues to execute. And they're executing really across all of the metrics. So it's not just growing revenues, but they're highly, highly profitable. They have 46% operating margin.
Wow.
And
right.
And you have to remember, to some extent, they are a startup in different businesses. So we talk about Facebook, they've got 2.2 billion users, and Instagram has 800 million users, so that's great. What we don't talk about that much is the 1.3 billion users for Facebook Messenger that they've just started to make money off of, and they make absolutely no money off of the 1.5 billion WhatsApp users. So they've got, to some extent, two startups buried within the company between Messenger and WhatsApp that they still haven't really started to monetize yet. And that gives me a lot of comfort, especially when you look at the multiple it's trading at 20 times non-GAAP, calendar 18 earnings. The market's at 17. These guys are growing the top line at 50%.
Wow.
Yeah, but you've got just the world is awash in venture capital. Are new competitors being funded? And if not, why not? Is Facebook seen as so dominant that won't work?
Yeah, I mean, I think people are trying to work around the edges, but you have to remember with Facebook, there's something pretty unique, which is the network effect. You're not going to get off of Facebook and go to Google Plus if your friends aren't there. So you can't really easily switch. If you're dealing with Google, for example, and somebody came out with a much better search engine, there's nothing to stop you from going to the other one. The problem with this is that even if somebody developed a great other alternative social media site, you're not going to move unless all of your friends move to it, and that's probably not going to happen immediately.
So Dan, real quick, Intel and Microsoft after the bell tonight, good quarters? What are you expecting?
Yeah, I mean, Intel's one of our largest positions. We like it quite a bit. I think the real key for Intel is enterprise demand has been really bad for the last couple of years. That really started to improve in the fourth quarter, and I think it's going to be very good for this year. So we like Intel a lot, and it's got a low multiple as well in this environment at about 14 times. So we like that quite a bit. Microsoft, similarly, we think they should have a pretty solid quarter. The multiple is quite a bit higher at 24 times, so not as preferred to us as Intel.
All right, we'll leave it there. Dan, always great to talk with you. Thanks so much.
Thank you.
We appreciate it. Dan Niles joining us there, Alpha One Capital.